Okay, welcome to another live session here on LGI. So today we're going to be talking about how many stocks you should own. And we actually did this conversation a few years ago, one of our earlier ones. And 4 years later, I still see it as something pretty relevant to talk about because I'm still working with persons in whether coaching, whether consultation, whether just conversations in our Telegram group, various ways it may come up, and I'm tempted to ask, how many stocks they own, and I'm always curious as to what the number is. So even before I get into the session, I'm going to ask you, I'm going to post it in the chat and ask you to just take our poll to tell me so I can use that data how many stocks. Nathan says I have no stocks. Well, okay, how are you building wealth, Nathan? You can tell me. So I just posted that poll and we have 4 votes. So I'm going to need a lot more than that. Hopefully we get at least 20 to 30. The poll is also in the description over on YouTube. But we're trying to answer the question of how many stocks you should own. And so, let me get your feedback, and then I have a short presentation, and then we'll just talk about it mostly as usual for these sessions. If you have questions, post them as we go throughout. I'll answer as much as I can, and we'll see where we end up. All right. So before we get started, I'll just do my usual call to action and invite you to join our Telegram group. We are discussing the stock market every day. We're talking about different investments. Somebody was talking about NVIDIA today in our US channel, and I had to check my portfolio because I bought NVIDIA late, but I'm happy that I'm up a good amount now, actually. So that was good to see. So I'm going to share the link for our Telegram group here, and you can join that community for free, right? And next, I'll mention our investment challenge. Still 3 months to go. Still 3 months. It's $30 a month, and you get to join our monthly sessions. You get a private WhatsApp group, and you get the benefit of all the videos that you'd have missed. So you get to watch 1 year worth of videos, but the challenge ends in 3 months. So you really should say join us for a 3-month challenge here, because we're going to wrap up in December, but there's still time. And I've known persons who just join like 6 months in, 7 months in, watch all of the videos, and they're like, ready to go. Some persons will say they'll wait for the next one, but I will tell you, we don't know the format that the next one will take. Currently, we're still planning it out, so best to join now. All right. So let me get these slides out of the way. I'm always very interested in this conversation. We have 8 votes. I'll ask you for for some more. The responses, I'm laughing because they're so interesting already. All right. So when we talk about how many stocks you should own, it really comes down to a question of diversification versus concentration. All right. So I'll give you the high level explanation of both. Right. So you diversify really to spread your risk. So it's the way that we all got introduced to investing. I'm certain of it. When you first learned about investing, you probably heard about diversification. You probably heard the concept of not putting all your eggs in one basket, and so on and so forth. So we're all very familiar with diversification. Concentration is hardly spoken about directly. So I'll explain concentration a little bit later, and then I'll talk about for a little bit kind of how we get there, because I started it in our last video, and I'll just spend 2 minutes explaining how we get there, right? And yeah, so how we get there usually, and I'll share a little bit about my journey at first when I just started investing. So I started investing in the Jamaica stock market in 2017. VMIL was my very first IPO, and I see our CEO in the chat saying good evening. So what we did, Renee and myself, we took all of our savings and we put it on that one IPO, right? And it did well. We made some money there. And then over time, I just kept hearing of different stocks, right? So I'll talk to my advisor, I'll talk to friends, I'll talk to, check on social media, etc. And so I'm hearing about stocks that other people like, stocks that are going to do well. Because even though I had my one stock at the time, it was doing well. It was a single stock in my portfolio at the time. Well, I did have a US portfolio, but talking about the Jamaican market. And, I started to just buy up, heard somebody say something about it. Somebody else say something about it, especially when it started moving, right? One of the things I suffered from early out was just buying on impulse, right? So I would just buy, you mention a stock to me, I'm buying it, right? And it got to a point where when I counted, I had 24 stocks. And it was very funny to see me getting to that number. And again, it didn't happen like that, right? I had some cash here, I'd buy something. I had some cash there, I'd buy something. IPO came out, I'd buy something. And it didn't happen overnight, but that's where I got to, right? And every new opportunity, I was like, okay, especially when I started to lose money, because of course, when I got into double digits, it got harder to track. I didn't know what was happening with all of the stocks at all the time. And then when I got into some serious losses, I was so torn because I'm like, what do I do? And so I tried to get the next big thing to be able to compensate for the loss that I was experiencing, right? Tell me if you've ever experienced this, by the way, because it can't be just me, right? So I'll share the poll shortly, but some of the numbers I'm seeing so far, I think one person was trying to type 50. I refuse to believe that that's true. Somebody could not own 50 stocks here. I'm going to assume they're joking, right? I see numbers like 4, 5, 10, 7, 3. So we'll talk about how much is a good number a little later. But please participate in our poll. I'm going to ask, well, let me share the link one more time so that you can take it. And yeah, so hi, Nikki. Thank you for joining us. Sean, so as I said, it didn't happen overnight. It wasn't my intent to get to 24 stocks. It wasn't like I didn't sit down and say, okay, I'm going to buy 24 stocks. It got there over time, right? So I also had multiple brokerage accounts, right? So I'd have 4 here, 5 there, 8 there, especially when I started to use margin because it wasn't my cash. I could just, I'd take out margin for a certain amount, put it on 2 or 3 stocks because I'm expecting that the next report is going to be good for those 3 and I didn't want to sell the ones that I had before. Interesting journey, right? And so let me go back to the slide, right? So diversification, which is what we're going to talk about first, is the act of spreading your capital across multiple investments to reduce risk. This sounds awesome, right? This sounds like something we should all be doing. But I'm going to talk about some of the pros and cons of this, right? So this is the definition for diversification. And I'm going to explain first some benefits, right? So the benefits here, you're able to reduce volatility. That sounds like an awesome thing. You get protection against downturns. So if, for example, a pandemic happens or something unfavorable, some economic issue comes up and market is underperforming, you get somewhat of a protection, somewhat. And I'll get into why I don't necessarily agree with this 100%. And then, of course, it can be done across different asset classes. So I'll just say I think the best form of diversification is across asset classes, right? Let me tell you what I mean. So for us, we own real estate, we own stocks, we own cryptocurrency, we have some foreign exchange, we have a business. We're properly diversified across asset classes. Within each asset class, though, we're very, concentrated, right? Let me talk about some of the risk of diversification, right? So, and this is the most obvious one, the first one, lower returns. This is what most people don't talk about, right? Most people don't talk about the fact that they have, 15 stocks, 20 stocks, and you're not making any money, right? So imagine you have those 15 stocks, those 18 stocks, and when you look at, you might have one stock doing really well. You might have 3 stocks doing really well. You might even have 5 stocks doing really well. But then you have 10 or 7 or 8 that are either break even or in loss. And so your overall profitability is actually very low, right? Imagine having a $1 million, $2 million, $3 million portfolio, and your profit is very close to break even, or maybe you're actually, some of you in a loss, right? It's a very difficult position to be in. Let me see how many votes we have. We have 13 votes. Please, guys, participate in our poll, because I want to hear how many stocks you own. All right, so I'm going to share the poll link one more time. I'm trying to get to at least 30 votes, right? Because we have 29 persons on now. We should be able to get at least 30 as persons come in and out, right? And the next part we have here is increased management and research. For those who own 15 or more stocks, tell me, do you actively manage and research all of those? I don't think so, right? And that was a challenge I was having. I was favoring very specific stocks. So there were some stocks that I would track, daily, weekly, whenever. There are some I would even forget that I have them in my portfolio. I just go on about my business, and then months would pass, the price would go down, or something would happen. Maybe the price went up, but I didn't have time to manage everything, because especially as a beginner, you don't have that time, right? So that increased management and research is a big deal, because I'm gonna quote some scripture for those of you who use biblical principles to invest like I do. All right, we're supposed to pay attention to our herds, right? Pay attention to our investments. So we can't actively manage 15, 20, 25 stocks. It's literally impossible. We're not designed to do that. We don't have the bandwidth to do that, right? And then finally, of course, if you're dealing with any funds, mutual funds, equity funds, unit trusts, etc., you have to look out for fees. Because those funds are managed by someone else, you will have an issue of management fees to contend with. I don't know the going rate for fees as at the point of this video, but it's something that you have to pay attention to should you choose to go that route, right? Because usually there is some fee, right? So I'm going to pause there. I want to check our poll and see where we are. We're at 18 votes. So the highest number I'm seeing here so far is 14. So we're just going to get 12 more votes and then I'll share it. But thanks to everybody who's been participating so far. And yeah. Okay. So let's talk about the other side of it, right? Let's talk about what you would do instead of diversification, or let's kind of share the other side to it, right? So concentration is limiting capital allocation to a handful of investments, right? If you want to think about a handful, a handful is 5, right? And I'll talk about again that ideal number a little bit later, but you want to think, well, let me get into the benefits, right? Benefits are higher returns, and I hear, as I said, that somebody saying but it's also higher risk. We'll get there, right? So you get higher returns with concentration. Most of those persons you see that they advertise their net worth for, the Bill Gates, the Elon Musk, the Warren Buffetts, etc., they're likely very, very concentrated, right? Sure, their wealth may diversify as they get wealthier, because of course, if you have 100 million, you have $1 billion, you can now spread that out. But for those of us with limited capital, we can't afford to be spreading it against 20, 30 assets, because it's going to limit our return. So you get higher returns when you're concentrated. Of course, this means that your research has to be on point, right? It's also easier to manage, easy to research 2, 3, 4, 5 companies, look at their quarterly report, watch their earnings calls here on Learn, Grow, Invest, check out our stock reviews on them, etc., etc. Easier to manage, a smaller number. And of course, a half year can be done across asset classes. I don't think that point should be there, but the idea is, well, it's still a valid point, but it's not one that I intended to be there. So I think about concentration as, so you've seen that image of spreading your eggs across multiple baskets. Think of it as having a single basket, right? I know that's a very controversial thing, right? But I've been investing for 8 years. I've been doing it for a while. I've seen the result of both, right? Let's talk about some of the risk though. Make it balanced. So you do have increased risk when you concentrate, and I have seen that. You have to have patience, because let's say that the market is doing well, but you're one basket not doing well. You have to know that you have researched it well enough, and maybe this season is not your season, right? It is very, very sensitive to market downturns. If you're not in the right company, and there's actually a strategy to manage concentration, right? Which I don't know if I'll cover it tonight, but there's a way to manage concentration, right? And finally, it requires active management. So for those of you who will say, okay, Jermaine, you've sold me on the idea of concentration, but I don't have the time. If you do not make the time to manage your investments, you won't make any money. That's just the truth. You won't make any money, and you don't need a lot of time to manage your investments, right? I think if you invest, I would say at minimum 4 hours a month, you can reasonably manage your stock portfolio that way. That's an hour a week on average, right? And of course, you have to build out a system. You have to have your sources for research down. You have to know what to look for, as in how to analyze companies, etc. There's a lot. No, Roger, I'm not only talking about the JSE. What I'm sharing here applies to any market, anywhere in the world that you're investing, right? So let me pause there and take some questions. I don't want to lose the chat. So Nikki's asking, what are my thoughts on Sagicor Sigma? I'd have to have a look. I don't remember the construction of Sigma. I've thought about doing a review of different funds, but I just haven't gotten around to it. So unfortunately, Nikki, I haven't checked it out. But yeah, I was gonna say that's a perfect thing to maybe have a one-on-one consultation for. So maybe I'll show you how to assess it if you're not sure how. So Renee is saying our stock tracker helped with the tracking, but by the time the price change, it was usually too late. Yes. So Renee was talking about is just the tracking and the management of just when we had too many stocks, right? So Roger says he has 10 stocks. That's not bad, Roger, depending on how experienced you are. So Orville, you know we use Excel. We built a stock tracker on this channel. The video, I can find it and share it later. We showed you how to connect to the Mayberry trade sheet, pull that data into Excel, create a tracker in Excel for your stock portfolio. And what I'm planning to do is actually do a video on showing you how to create a dashboard with that. All right. And I did answer your question already, Roger, that I'm not only talking about the JSC, we're talking about any, this is a timeless principle, I'd say, right? It works multiple markets, right? Because it's a principle, right? So it's not reduced to a market, right? I'm gonna ask a question now, guys, and I want you to tell me in the chat. There are 40 of you here. How many stocks should you own? I'm gonna check on Instagram as well. Okay, cool. We're getting some. Oh, so I'm assuming that this is you, Nikki. What are your thoughts on Sagicor Sigma funds? That's Blackwood's Natural Hair Care. Sounds like an interesting page. And then Ricky, the general, saying maybe that's what is going to happen to me because I'm just buying. Or really, you can't just buy. Right? Oliver is asking for the poll. Let me share the poll on Instagram. Forgive me, guys. I don't know if you can click on it from the Instagram chat. Hopefully you can. But if you hop over to YouTube, if you're on IG, hop over to YouTube. The link is in the description and in the chat. And if you're in our Telegram group, the link is in the general channel over there. All right. So, and what Ricky is saying is the same thing that used to happen to me. I'm just buying. And yeah, so I want to see, just put a number, guys. Just put a number. I want to see the numbers going down. So Roger says, if you listen to most experts, 15 to 20 is good. Okay. Again, I don't agree with that. 15 to 20. So 15 to 20. Well, again, it depends on where you are. Let me say it depends on where you are. Because in my mind, I'm thinking beginner. I wouldn't tell a beginner to do 15 to 20. Right? Because there's a lot of things to consider there. All right, so Devon says up to 7. Orville says 6. Sean says 5. Renee says 5. I think Renee has 3 to 4. Proud of you. Rose says I have 4 main stocks and then a few that I trade. I want to. I'm gonna star your comment, Rosemary, because I have something to say about that. Sean, I think you said 5 already. Orville says he currently holds 3, but 6 would be good for me to manage comfortably. Nikki said 4. Akelia says between 4 and 6, but I have 4. If they are going company 5 to 7, I'm not sure that part. Ash the guy says, just starting out, I am high on 4 after doing research. That's a good number. Sean says 3 junior, 2 main. Renee says I have 4 and manage 2 for our son. Okay, so that's separate. So our son, or Jellybean, has his own portfolio as well. Diane says 10. So Diane, I'll ask you, how long have you been investing? The Marley says 4. Patrick says, I'm not sure how much, but I was thinking as many as you can. So Patrick, you need to have a number in mind. Jaced says, I've lost count. I buy and hold, especially IPO over the last 3 years. Okay. Oh, Devon was saying, if they're a good company. Okay, I got you. All right, so let me see where the poll is now. We're at 24. So how do I share this poll? Hopefully, let me stop for a sec and get this poll over. Okay. So Mark says, why would the number of stocks, if each is bought at an attractive price? Mark, I think you may want to reread that. I'm not sure I understand it. I think you're saying, why would there be an issue with the number of stocks if each is bought at an attractive price? Okay. I see what you may be saying there, but that sounds like what you're saying, and this is what, if it is that you buy, again, let me put it this way, Mark. If you have, let's say somebody has the 15 to 20 that I think somebody said that the experts tell you to do. If you have 15 to 20 and you maybe hold that for 10, 15, 20 years, maybe that's a different conversation. But think about what happened in 2020. A lot of persons have not even recovered since 2020. We're 4 years into the future. And my question is, how many of those do you think will actually recover in the next 4 years to where they were post pre-2020? Right? That's a very big downside for being too diversified, right? Because now I know a lot of people still waiting on some stocks to recover. And if they were actively managing their portfolio, they would not be at a point where 5, 10 stocks are still in loss position. So again, I'm not getting into the strategy. We're just talking about how many, right? Damarley, that is one of them that I spoke about. Managing, active management of a lot of stocks is almost impossible for somebody who has a job, who has a family, who has, ambitions, right? Karine says, I had 10, but only started to see real growth when I started concentrating on 3. Hence my question on well, Karine, we're doing this live because of you, right? You gave me the idea to come back to this topic. As I said, we did it a few years ago. We did it 4 years ago, and we just haven't spoken about it in a while, right? Renee says, I think the management of a large number of stocks can become challenging, and also it means spreading your funds over more stocks, meaning less dividends when they are paid. Renee, I can't say on the live that I was going to say I love you. I think that's inappropriate, but guys, she's my wife. I think I can say that. It means that we're of the same mind, right? It is, you are, as a dividend investor, you also have the impact of not getting meaningful dividends if you have too many stocks, right? Diane is waiting for the financial sector to recover. And I'm just waiting for the comments to come in. I like the participation, by the way. We are at 26 votes. Let me share the poll one more time so we can get that 30 that I'm hoping to get. Let me check Instagram. Glenville Brown says 4 to 5 stocks are great. 4 for the long term, 1 to trade. So I think you can, yeah, I like that. Prince says, I've been buying stocks for over 20 years and have a large portfolio. As soon as the market recovers, I intend to balance out to about 10. Prince, I wish I could see a portfolio. I'd love to see. You've been investing for over 20 years. Yeah, DM me, Prince. I'd love to know what's in your portfolio, because 20 years ago, I've only been investing 8 years. I'd love to see what you have in your portfolio, Prince. DM me, please. All right. So let me share the poll now. I think we have enough to share. So the current, so we have, I think the leading one is 10 here. That's how I'm reading it, 10 or 4. We see as much as 15, 5, 8, 20. Someone has 20. 14, 13, etc. Right? Somebody has one. I'd love to know the one. The person who has one stock, just DM me. Let me know which one it is. All right. So this is our poll so far. I'm gonna leave this poll up for 7 days. So if you're watching this on the replay, feel free to take the poll and I'll publish the results at the end of 7 days. Okay. Let me go back to the slides now. So we're asking the question here, how many stocks should you own? And I'm going to tell you, right? I'm not going to keep you in suspense here. So for beginners, 4 to 6 stocks is a good number. For persons who are experienced, 7 to 15 is a good number. And there are so many caveats to this, of course, because there is a specific strategy which I teach in my coaching program about how you balance that 7 to 15, right? Actually did a portfolio construction session as a part of the investment challenge as well. So you can join the investment challenge if you want access to that. So we talk about how you break down that 7 to 15. Right? There's a specific way that you do it for this to make sense. Otherwise, 4 to 6 is the number that you want to stay at. So I'm going to pause here and see if there are any questions. Let me know if you have any questions about this. Roger says, I buy no matter what the market is doing. Sean says, if you find an opportunity to get some returns on other stocks, but you're not sure which one will do well first, wouldn't splitting your money help to capture at least one of those opportunities? No, Sean. No. If you assess the opportunity cost and you think there's another investment that would give you more value, switch to that investment. Exactly, Orville. Spread yourself too thin, the gains won't be significant. And that's what a lot of us are experiencing, right? When we don't understand how to diversify, we have too many stocks. So I want everybody to do this for me. After this live, check your portfolio. And for those of you with 15 or more, or even 10 or more, look to see how much money you're actually making. Look to see how many stocks are actually doing well versus how much aren't. And I'm sure if we were to poll the entire group, it would be a small percentage of persons who have 10 and all 10 are doing well, right? So that downturn is not a function of the number as if you had 4. All of them could have been way down since 2020. It is more selection. Not sure I'm following you here again, Mark. Trying to remember what you said last. Mark, I'd love for you to even come to one of our monthly meetings when we have those again, because I'd love to have that discussion with you. Vanessa saying, I have too many. I was just thinking I need to get rid of the losing ones at a loss and put the money elsewhere. Vanessa, not necessarily. Not necessarily, Vanessa. So there's a way to do it. There's a way to bring it down to a reasonable number. It doesn't necessarily mean that you sell only the losing ones. There's a way to do it. There's a way to do it, Vanessa. So again, I'd recommend that you maybe book a one-on-one consultation with me, because I can show you or help you identify a process to eliminate the ones that you have, right? Don't just sell the ones that are losing, because if it may be losing now, but in 5 years, it's going to be probably doing much better, right? So you don't want to just sell the ones that are losing. That's not the way to do it. So Diane says, I'm losing on all of my financial stocks. Yes, Diane, and you will be, I'd say, for a little while longer. Nikki says, I'm buying for the long term. Don't have the time for trading. What are some good dividend stocks? Nikki, you're asking the right question. Asking the right question. I should probably do a dividend stock video. Yeah. When you live together, long enough, you start to resemble each other. Listen, Orville. So, guys, I'll share completely unrelated. Renee and I just celebrated our 15-year anniversary. We've been married for 15 years now. We literally just celebrated 2 days ago in terms of the celebration with our family and friends. And I've brought Renee has come a long way. At first, she didn't want to invest. She didn't want to actively invest, right? She just left it up to me. And I said to her that she needs to learn how to do it. If at some point in the future I'm not here to manage our portfolio, she needs to have some idea of how to do it. And so she started to pay more attention. And when I listen to her talk to people about investing now, we sound similar. So I'm very proud of her. I just want to say that. All right. Devon saying everybody doesn't buy stock for dividends. Yeah, for sure. Diane says I need help to balance my portfolio. Diane, one-on-one consultation. Feel free to reach out. Send us a DM on Instagram, any platform, and we can give you that help that you need. Devon says it's good to buy some for value, some for growth. You have a portion of it. Devon. SE says I currently have 11, but I'm in the process of consolidating down to 3 to 4. SC, I'd love to be a fly on the wall as you're going through that. Why does experience play a part in how many stocks you should have? Sean, think about it. So as you become more experienced, and I'm assuming that it's with experience should come effective investing, right? Because there are persons who have been investing longer than I have that probably aren't making the same amount of money I've made, right? So I'm not just saying experienced for in that general sense, meaning length of time. It's more about having a process to invest, to research, to manage, knowing how to make money, knowing how to reinvest profits. So all of those things. So experience does have a factor, right? Cash option 2 says three ETFs and chill. The right ETFs, I could see that. One tech, one dividend, one AI. No, AI, gaming, healthcare. Yeah, maybe. I'll do a ETF episode one day, for sure. Thank you, Nikki. Thank you, Karine. Kimani says, what if you split your stocks between long-term and short-term? For example, in the heights of dollar IPO madness, why not hold my normal 4 and invest in as many IPOs as possible? Okay. I say that. That's reasonable. Solar Light JA, yes, we're on YouTube now. We're streaming to all platforms. So please, for those on Instagram, jump over to YouTube. And we are here. Devon says Carreras is a good dividend stock. Okay, Carreras is known for good dividends. Personally, though, we don't invest in Carreras or Supreme Ventures, of course, because of our faith. And of course, other reasons, of course. Mark says, I was suggesting that if the purchase of stocks are at bargain prices, thus value, it shouldn't matter if it's 5 or 15. Return function on each stock is the same. Mark, you are partly true. But let me ask you this, Mark. And as I said, Mark, I'd love for us to hold a conversation one day, right? So what Mark is saying, and tell me if this is what if this is what you're saying. So Mark is saying, if you get stocks at bargain prices, it shouldn't matter if it's 5 or 15. So let's use 15. Let's say you get 15 stocks at bargain prices, right? Different sectors, different dividend policies, etc. Right? Let's say that all of them perform well, right? That's best case. All of them perform well. And let's say some do between 10%, 20%, 500%, 1,000%. You're only going to benefit from the average return of all of them, because doing well for all of them, maybe they're all in profit, but varying percentages, right? We know that's extremely unlikely. So let's say your average return for all 15 is what? 30%, 40%. That would be better now. So let's go down to 5, right? Let's say you do your research, you get some help, maybe through financial coaching, who knows, and you're able to get, let's say you found 3 stocks out of the 5 that you're able to make a solid investment in. You put all of that money that you'd have taken from the 15 and spread across 5. Because if you put 100,000 on 5 stocks, that's $500,000. If you put 100,000 on 15 stocks, that's $1.5 million. Why not take the 1.5 million and put on 5 stocks? That'd be 300,000 each. You have more volume. When you're in profit, your profits will be better. When you get dividends, your dividends will be better. All right. So Mark, there's that perspective is still flawed because the average returns are still going to be less than the best performing one. Sean says if you have a really good position on a stock, talking 200% growth, wouldn't continue buying off that stock cause you to reduce your gains because of DCA. Okay, I get what you're saying, Sean. Yes, but, right? You want to, for a good company, you want to continue to buy. If the reason why you bought that company in the first place is still there, I think persons are too concerned about the percentage gain, so they don't want a dollar cost average, because if they average up, their profit goes down. That is a short-term mindset, because if you think about it, Sean, that same one that's, let's say it's up 200% now. You bought it at $1, it's now at $3, 200% up. You're afraid to buy more because you don't want your average price to go to $2, and now it's only showing you're 50% up. I'm not concerned about percentage gains. I'm concerned about actual dollar value gains in the long term. So if you get more, if you own more of a good company, long term, it will continue to grow. So if you bring down your, let's say average price goes to $2, $2.50 for that same good company, then 2 years from now, 3 years from now, it's $8. It wouldn't be an issue that you bought it at an average price of $2 or $3, because again, you'd be up and now you have more volume. All right. And then Mark saying the number of stocks would, however, impact the research requirements. For sure. Exactly that. How much is for my one-on-one? Patrick is asking. Okay, let me share some info on that. Let me stick a pin in that. Patrick, give me 5 minutes because we're almost done, and then I can explain it. All right. Let me see if there are any more slides. Okay. So let me just cover this part, Patrick, and Anil. I'm sorry, I was laughing. Anil, 46 stocks. Are you saying that you're holding a unit trust, Anil, or some sort of equity fund, or you have literally 46 stocks? Tell me, Anil. That would be amazing. That would be amazing. I'd love to see how you track that. So let me tell you how you choose between diversification and concentration, right? And let me put this larger so we can all see it. So you're going to diversify to maintain your wealth. You're going to concentrate to build wealth. So this addresses all the concern that you have, right? Why diversify to remain? Why have this amount of stocks to remain? Why should it only be 4 to 6? This answers that question, right? And this is what I saw as well, where when I had the 24 stocks and I was investing 2 years, 3 years, I'm looking at my returns, and they were not meaningful. At one point, I was actually losing money, right? But what was happening is that there were a handful of winners in my portfolio, and they were even skewing the average. So when I took out my top 2 or 3 stocks and I looked at the rest of my portfolio, I was in some serious losses, right? And that's when I realized, I was like, this is not getting me anywhere. This is not making sense. So I started to look at what Orville says. Orville. No, O'Neill. 46 stocks is a lot. 46 is a lot, O'Neill. How do you manage so much? How do you manage 46? I'm legitimately concerned now. Legitimately concerned. Wow. O'Neill, like, wow. Okay. So if you think about it, and this is again, this is one of the things that come up when we do like coaching or consultations. You know, when we start to look at what your goals are. Now, there's nothing wrong with investing to maintain your wealth, and let me tell you why. Let's say that you have great income, because there are persons earning a reasonable salary. Their expenses are low. They have multiple income streams. So they would really be investing to ensure that their wealth stays where it is. Because if they continue to earn positive cash flow each month, they're able to max out their pension. 10, 20, 30 years from now, they're okay. And I know some of you may not think that it's possible for somebody to I saw somebody once say that you can't get rich or wealthy from a 9 to 5. That's not true. There are persons who are earning a decent salary 9 to 5. There are certain sectors that pay well 9 to 5. So it really depends on how much you're making. So for those of you who are making, let's say that you're making $5 million per year, and your expenses are somewhere around $2 million. If you're saving $3 million per year for 20 years at $60 million now, some may say, well, in 30 years, 60 million not value, 60 million, blah, blah, blah. But $60 million just from savings, if you put that in something that's giving you a reasonable return, you're going to be fine. So you can have a diversified portfolio because the focus for you is just maintaining your wealth. You don't want any large shocks. You don't want to lose any significant wealth. You're okay. But those of you like me, like how we started, because when we started investing, we're trying to get out of debt. Our net worth was negative 2 million. We're trying to get out of that, right? Now our portfolio is, our net worth is significantly different, right? So I am more diversified now in terms of asset classes than I was before, because as I said, we have real estate, we have stocks, we have crypto, we have foreign exchange, etc. Right? But when we started, we just started with stocks until we got to a certain point, right? So if you take away one thing from tonight, take away this, right? You're only going to diversify if you want to maintain your wealth, and you are going to concentrate if you want to build your wealth, all right? So let me take final comments and thoughts, and then I'll talk about how you can get help from me if you need help, all right? All right, so let's see. Mark says, you are assuming that you have perfect foresight as to which will give you 200%. For example, you could have concentrated in 4 stocks and they all return 5%. I am certainly not, I'm not assuming that, Mark. I'm not assuming that you have perfect foresight, because that was one of the risks that I mentioned, that you do have, there's such a thing called concentration risk, right? For sure. But if you think about the average person, right, there are 70 persons here on this live stream now. Most of us are probably not making enough money to do everything that we want to do each month, meaning the amount of capital that we have to invest each month may not be significant. So for us, we have to invest, not because it's something fun to do, but if we don't invest, we're not going to retire in a good position. So if we take our best income earning years from the age of 30 to maybe 50, and we're too diversified, when we get to 50 or 55 or 60 or whenever we retire, if we just have a break-even portfolio, that's not the state that we want to be in. That's a serious concern, and I'm hearing the passion in my voice as I'm saying it. Like that's a big concern for us, Mark. There are persons who can't retire now because of the pandemic and what happened to their portfolio. A lot of persons were in, for example, the financial stocks. Their pension funds are down, their portfolios are down, and what they were expecting to get at retirement, they don't have. So you can't afford to be too diversified, right? Because you won't have anything meaningful when you're ready for it, right? So Sean, I'm sorry, I'm not gonna put that one up on the screen. Mark says O'Neill is running an index fund. No, I'm serious. Like O'Neill, I feel like I want to have you reach out to me. I really do want to help you. To see if we can get that sorted out for you. So Romardo is asking, what broker do I use to buy stocks in the US other than Interactive Brokers? So I do have a TD Ameritrade account that was before we were on the gray list. I think we're off it now. So yeah. So Anil says, all these stocks keeps my portfolio balanced. If 5 lose, 7 win. But Anil, if you have 46 stocks and 7 win and 39 lose, you didn't make any money. You didn't make any money, Anil. That's a problem. Devon says, we weren't taught how to make money. We were taught to be a slave. Devon, I'm gonna pin that comment as well, and I'll tell you why. So you heard me start this conversation by saying most of us are taught about the benefits of diversification, and we have to consider the source, right? There are times when we're taught about the benefits of something because it benefits those who are telling us about it, right? So you have to, personal finance is personal, right? And so you have to be clear about how to use diversification, right? Rose is saying maybe if you run the numbers, more people would see it. No, so Rose, persons just need to look at their portfolios. We don't even need to run the numbers. Everybody can look at their portfolio and you will see. Look at your portfolio. Look at your portfolio, right? I was trying to find my old portfolio to see if I could share a screenshot of that, but I couldn't find it, right? So I can't believe it's almost an hour already. So before I go, I want to ask you guys to join our Telegram group. If you've been enjoying these live streams, you can join the ongoing discussion over on Telegram. So let me share that link. I am also going to talk about now how you can work with me, right? For those of you who may need help, right? Some of you are okay. Some of you have the right amount of stocks, you know how to invest, you know what you're doing. Let me help you for those who need help, right? So there are 3 ways you can work with me. So first, I can do one-on-one consultation with you. That's 45 to 60 minutes to cover any financial goal that you wish, right? So if you want assistance or support, let's say that, so let me tell you first what I can't do with you. I can't look at your portfolio and tell you to sell one or buy the other. That's not what I do, right? And that's not what I do as a coach, right? So what I would help you with is a process to help you make the decision yourself, what to eliminate or what to keep, right? Because I have to navigate that very carefully because I don't want to get in any trouble. The next thing that you can do with me is one-on-one coaching. One-on-one coaching is where we get one-on-one time together. We do it for 3 months or we do it for 1 year. I don't have any other programs right now, unfortunately. If it's 3 months, we get 10 sessions in the 3 months, and we have a very set scope that which we go through. But the very first session will tell us how how we need to spend the time. Because if we need help with research, we'll spend most of our time there. If you need help with maybe profit maximization strategies, we'll spend time there. And if the 1 year program is for those who want ongoing accountability, right? You want to cover multiple topics. You want to build. You want to get to the point where you're able to do it yourself long term. I think the 1 year program is the best for that. And then the third way is group coaching. No, we don't have any group coaching programs out now, and that's the truth. The truth is because we are prioritizing one-on-one coaching, right? Because I find that in a group setting, not everybody participates sometimes. So if we have a group of 15 to 20 persons, maybe 5 are really active, 10 you hardly hear from them, and then 5 it's just, so groups are a little bit tricky. You have to find the right way to continue to get the group involved. And I find that with the one-on-one, it's I get to work with you in a more direct way. It's more effective, right? That's just what I'm going through right now. I don't know if later we'll find a more creative way to keep the group engaged as we go. But my concern is that I work with you in group coaching. We end the group coaching program 6 months later, I check in on you, and you say, Jermaine, well, I've fallen off the wagon. I'm not doing anything. I don't want that to happen. I'd rather work with you one-on-one for 3 months or 1 year, and be sure that you have something solid in place so that it actually makes a difference for you. All right, so Patrick, hopefully that helps. I'm going to share those links now. If you go to our website, let me share the link for a one-on-one consultation. So book one-to-one consultation. Favor, good night. We're about to wrap up. So and then from there, so most persons, you can start with one-on-one consultation, because right now we don't have any one-on-one coaching slots. They're fully booked out until January next year, but we will have a call out around mid-December for January. So if you want to work with me one-on-one, you can look out for it at that time. The cost for a one-on-one session is $100 US, right, for 1 hour. And if you go to our website, the prices are there. All right, let me see if I missed any question. Patrick is saying, as a beginner investor, is it best to buy the stock that are at a lower value? Patrick, I think you should reach out to me for the one-on-one, because it's so they are. Let me answer it generally, of course. So you want to focus on buying companies that you expect that there is some catalyst or incentive long-term that's going to cause that company to grow. That's a short answer for that question, right? So low is going to be relative, right? Low is going to be relative, right? All right, yes, so Favor, if you go to our website, you can actually book the one-on-one consultation, make the payment there. Once you make the payment, we get an email. We send you the link to book the session. It's usually booked within 24 hours after payment, all right? All right, so I did start some comments that I wanted to close out with. So give me 5 minutes to wrap up, and this is your last chance to submit any questions. I'll take just 2 more questions max, okay? All right, so I'd bookmark some comments only because I wanted to kind of close on this, right? So Rosemary said, I have 4 stocks and then a few that I trade monthly. I think this is a great strategy, right? So if you have 4 main stocks and then you're trading a handful, I think that's okay, because it means that handful that you're trading, you'll move on from them when you get to your profit target. So I wanted to just say that. Let me actually take a screenshot of these comments that I've bookmarked. Vanessa said, I have too many and I was just thinking I need to get rid of the losing ones. I did say I would come back to this, right? So you have to have a process, and this is for everybody here. You have to have a process by which you eliminate a stock from your portfolio. You can't say just because it's in a loss, you're going to sell it. It may be in a loss now, and it's not in a loss a year from now. You have to know what to look for, right? So I wanted to just close out with that. You don't want to just sell the ones that are losing. That's not the best strategy. So Nikki mentioned about what are some good dividend stocks. Now we have a dividend investing video that you can check out. Show you how to calculate the yield. I show you how to get information on dividends, how to understand them, etc. We were to do a video on dividend investing strategies, but I didn't get around to it. But that same dividend investing video has some strategies in it that you should check out. But I am a dividend investor, and that's what's been the greatest contributor to my profitability in the last 3 years. And Devon said we weren't taught how to make money. We were taught how to be a slave. And I said I wanted to, I literally want to close on this because at some point, and I do believe this with all of my heart, and this is why we do Learn, Grow, Invest. We believe everybody should take accountability for their financial future, right? So when Devon speaks about what we were taught, I say this all the time, that everybody, by the time you get to an adult, you know how to take a loan. So we, as a culture, as people, we are taught that the key to our dreams or the key to accomplishing our goals is a loan. You want to go to university? I'm sure you know about student loan. You want to own a home? I'm sure you know about a mortgage. You want to get help with monthly expenses and bills? I'm sure you know about a credit card. For all the work we've done as Learn, Grow, Invest, there are more persons who know how to take on debt and go into debt more than those who know how to invest. And we've been doing this for the last 4 years publicly, 7 years total, right? So it's such a real thing that you mentioned, Devon. I don't know if you guys feel the same way about it like I do, but I'm very, very concerned about how leveraged we are as a culture. More than half the number of households in Jamaica, I believe, have credit card debt, right? I think I saw an article a few years ago that said that. Most persons are living above their means, right? So when I say that investing is a necessity, I'm not kidding, right? That's what we saw, Renee and myself, that we would not have enough for retirement if we didn't make a change. And it also caused us to really evaluate what our pension was going to do for us, because that's also another topic that when we did the projections for what our pension would have done for us, we weren't happy, right? Now, if it is that there are ways to maximize a pension, right? And that's for another day. But you can't rely solely on a pension, right? That payout is not going to be anywhere near where you think it is. So again, I say investing is a necessity. It's not optional for us, right? Anybody who is on this live thinking that it's optional, you're probably in a very, very good place, and I congratulate you. But it's a necessity for me. It's a part of good stewardship, as the Bible tells us, and it's just something that we have to do. We don't have a choice. All right. Final question here, Romardo. I don't know any other broker actually apart from Interactive Brokers, because that's the one I've been using. That's the one that is easily accessible from Jamaica. So unfortunately, I don't know of any other options. Sorry. All right. There ends my rant for today. So, all right, guys, final call to action for you to join our Telegram group. Join the conversation. We talk about this kind of thing every day in there. Let me share the link one more time for you to join Telegram. If you want to do a one-on-one consultation with me, you can. Just send us a DM at Learn, Grow, Invest. We actually saw an account imitating us recently, and I've always said to Renee that until we see somebody imitating us on social media, we we haven't made it. So there's a fake account on Telegram that is learngrow_invest or something like that. So please be sure wherever you're reaching out to us that it's learngrowinvest, all one word, and you'll be able to reach through to us. We're very transparent about what we're offering and or what we're selling. We do sell our service in terms of consultation support. We don't sell any apps. We don't sell anything that we don't publicly speak about, right? So if you don't find it on our website, if you don't find it on our social media, it is not from us. We're not going to DM you unsolicited and try to sell you something. We only engage you if you reach out to us first, right? Because we don't believe in forceful selling or any type of cold call selling, as the term says. So Rosemary, you're very welcome. I enjoy doing this, so hopefully you guys found value in the video. I'm not even going to check the likes today because you guys just don't like the video. I don't know why, but let me check here. 29 likes. There are 70 persons on the stream and the video has 29 likes. I mean, I don't feel like I have the energy to ask for likes today. So thanks, guys. Hopefully you enjoy the rest of your day, and I hope to see some of you. O'Neill, please reach out to me. I feel like you need a one-on-one session with me. So reach out to me, O'Neill, please. 46 is way too much. And yeah, I'll see you guys real soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N.